Year cycle, is it over?
Yeah,
Woo!
it's
Whoa.
over.
Unless you've been living under a rock, you've probably noticed the rising prices of stocks, gold, Bitcoin, and real estate over the last couple of years. Many attribute this to the so-called debasement trade, where investors move away from fiat currency into assets like these due to concerns about inflation and government debt. But is this a temporary trend or a lasting market shift? The debasement trade is simple. It's a bet that increasing sovereign debt and loose monetary policies will erode the purchasing power of cash. Investors, seeing the value of money decline, move their wealth into scarce or productive assets like stocks, gold, Bitcoin, and real estate. In essence, people want to own things that hold value rather than hold on to cash that's losing value. Take stocks, for example. When cash is losing value, owning businesses looks better. Companies with strong earnings, especially in booming sectors like AI, are becoming more attractive investments. Then there's gold, which has long been seen as a hedge against inflation. As concerns about currency debasement grow, gold has surged to all-time highs. Bitcoin, with its fixed supply and decentralized nature, is also part of this trend, especially after the launch of Bitcoin ETFs, which gave institutional investors easy access. Real estate also plays a role. Scarce, tangible, and essential, it remains a solid investment. Many people prefer owning property over holding cash, especially in times of inflation. But why is the debasement trade accelerating now? A key factor is fiscal dominance, where mounting government debt pressures central banks to keep interest rates low. This makes holding cash less appealing and fuels the debasement trade. The U.S. alone faces record debt levels, and global debt is at an all-time high. In response, many believe that money printing is the only solution, pushing people to dump fiat currency for hard assets. While some argue that the debasement thesis is the main driver behind this market surge, others believe the current rally is just another euphoric market cycle, fueled by sentiment, AI hype, and liquidity rather than solely debt concerns. However, both views have merit. Over time, cash does lose purchasing power, and assets like stocks, real estate, and Bitcoin tend to rise with inflation and economic growth. While short-term market cycles may cause volatility, the long-term trend still favors owning productive and scarce assets. So whether you're in the debasement trade or not, it's clear that diversifying into these assets is a solid strategy for the future. Thanks for tuning in. If you're interested in more macro content, check out our new channel, Coinbao Finance, for insights into modern finance and investing.